Welcome to Get Real with Eddie, the show that dives into local, regional, and national real estate, the largest creator of millionaires, and the key to building generational wealth. Hosted by Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie is here to share expert insights and strategies to help you unlock the power of real estate. Now, let's grow in real estate with Eddie Ruettiger.
Good morning, Nancy. How are you?
Good morning, Eddie. I am better.
Feeling better?
I am. Now you've got it.
So, I am not addicted to Jell-O, and I did not have to go into rehab for Jell-O. I'm just saying. But yes, I did come down with a little something over Easter weekend. Really hit me. It hit me Easter Day.
Yeah.
Like, I was at the family, and I was just exhausted. I literally took Monday off, and I slept all day long. I think you called me at 5 o'clock, and you honestly woke me up. And you're like, are you okay? And I'm like, no, I'm toast. I just could not keep
I'm telling you, this stuff's brutal. Yeah. I'm still coughing.
Wife missed Monday and Tuesday of work, too. She just went back today. So, I don't know what's going around. But you know what has been going around?
What?
A lot of charts about this market.
There's been a lot of chitty-chatting about this market.
Especially on LinkedIn. I'm seeing a lot of people throw out their theory.
There's a lot of theories.
However, I grabbed a couple charts off of there. And this one particular chart, I think really, really shows the tale of two markets of what's going on.
Okay. Let's see it.
Am I sharing?
Share, please.
I am not sharing. I thought I was sharing.
No.
All right, hold on. Let me get into the sharing. There we go. Dun 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 dun.
And hey, it's a chart. What do you know?
So this chart is the housing market has been split into two. Inventory south and west versus northeast and midwest. From the data is sourced from Realtor.com. And what it is it's showing the inventory levels, all right, pertaining to those regions. And when you look at the south and the west, all right, so if I say south and west, what states are you thinking?
South and west?
South and west states.
Oh, south and west. So south would be Mississippi, Louisiana, Alabama, Florida, Texas, the Carolinas.
And then the west states.
Nevada, New Mexico, California, Arizona.
So now if I say northeast and midwest, what are you thinking?
Northeast, Maine, New Hampshire, New York, down the Virginia, New Jersey, down the Atlantic coast.
And then in your Midwest states, Illinois,
Wisconsin,
Michigan,
Ohio, Indiana, Ohio, Iowa,
Missouri,
Wisconsin, Missouri,
maybe Kansas City. Kansas City, I think it depends on where they're at and whether
I guess Kansas. Yeah,
I think Tennessee is considered Midwest.
Tennessee,
I think is Midwest.
Yeah, it's not South.
Yeah. All right. Looking at the chart, okay.
Borderline.
The active listing count. All right.
Mm-hmm.
And it charts from back at the beginning of 2017 through 2026.
Yeah.
Okay?
Yeah.
The number of listings starting for the South and West were at 750,000, roughly. Climbed up, came down, climbed up, dropped dramatically from COVID, down to 250,000.
Then bounced After COVID, bounced back up.
Bounced a little bit up, dropped back down in 2022 to about 200,000. And then started climbing up since 2022. Got up to about 500,000, dropped. In 2023, we're about 400,000. Started climbing up again, got just over 500. Then started climbing again in 2024, got up to 7. Mid last year was up to 833,968. That was its peak.
Yeah, now they're on the upswing again. It looks like a ball, like a bouncing ball, where down and up, and when you go up, it goes higher, a little bit higher each up cycle.
Yes, that's exactly right. Meanwhile, the Northeast and Midwest does not look anything like that at all. They started at 500,000, we started around at the same time, 424,000. Went up to 512, came down to 372. Went up to 488, came down to 372. No, so we were already in 2017 into that housing shortage. We've talked about that in the past. Going into 2019, we had a housing shortage.
Oh, yeah.
We were sitting at 3 months worth of inventory already. Then COVID happened. We're at a height right before COVID of 460,000 roughly. Dropped to 176,000 in 2021 in listings.
Yeah.
All right, this is active listing count.
And we have yet to recover even to 2017.
Well, here's the
numbers.
thing. We started almost 300,000, no, actually 300,000 lower than the South and the West at the beginning in 2017.
Yeah.
We were in a pinch already, and then we dropped down to one. Our lowest was 2022, just like the South and Southwest. The bounces match, except theirs looks like a bouncing ball going up and down. Ours looks like a heartbeat monitor, just moving across.
Yeah, a little bit down, but... And again, we haven't recovered since... We haven't even recovered to 2017's numbers. We're still quite a bit lower than that.
Well, and here's the thing. So 2019 is our last normal market.
Yes.
All right?
Or what even close to being
a normal market was. All right?
Yeah.
South and Southwest are back at 2019 levels today.
Mm-hmm.
Northeast and Midwest, we are still 50% down in inventory, according to Realtor.com.
Isn't that interesting?
I'm going to come back to that one.
That's a really good graph.
Uh-huh. This is it's the tale of two markets.
Yeah. Very distinctively different. Not even a little.
And then I found this graph. All right.
Yeah, make it Nancy size.
I'm working on it.
Okay.
Trying to make it Eddie size. All right.
Yeah.
So this is from Lennar Investor Marketplace. 2,000 curated homes in 90 high-demand rental markets. Okay? So this declines and gains. All right? In the rental markets. This was put out by Lennar, the builder. Obviously trying to convince people to buy more housing. You know, don't pay the landlord's mortgage. Pay your own.
Right.
99 metros, declining prices. Okay?
Mm-hmm.
201 metros are gaining in price. And look at where the green gains are at.
Yeah.
They're in the Midwest,
Midwest
and East.
Yep.
All right? Look at where your declining markets are at. Florida, Georgia, Washington, Louisiana, Texas, parts of Arizona. Because Arizona they have their own tale of two cities going on in that state. So we talk about that.
I haven't really looked at that.
Yeah, they got their own tale of two cities. So does California.
Yeah.
Because California is also split.
Well, California, so there's a lot of issues, and there were a lot of issues with gentrification and that kind of stuff going on well before COVID hit.
Well, and you look at Las Vegas, San Francisco, that Southern California, they're in declining price thing, but anything above Los Angeles is going up in price value. All right, and on the rental side. This is on the rental side. All right. So this last graphic is the clickbait one. That's why I put this off. Because this adds in, it's not clickbait, but it adds into, well, it depends on where you're looking at it. Because it's looking at everything as a whole, and I don't think you can. When will the U.S. return? All right? When will U.S. homebuyers return? U.S. homebuyers haven't left. That's my first process. The argument to this graph is that the U.S. homebuyers aren't going to come back in until the U.S. mortgage payment versus income ratio comes into play. So let me explain. This starts off in the late 80s, and your percentage of total monthly income going to your house payment. Mm-hmm. So it was about 36% when it started, peaked at 36.8, and then it started moving down. 36 is a little bit high.
Yes.
Normally you want 32 and below. Most of your statisticians want you at 28% of your monthly payment, of your income is your monthly payment. 28%.
Yeah. To be comfortable and, yeah.
So that started moving down, and the 90 hit bottom, started getting down under that 28%, about 93. Moved back up to 32. Okay, it's high, but not horrible. Moved bouncing around that 28, got down to 25. 1999, it was at 25%. And as we know, 1999 was kind of like, boom, the market took off. Mm-hmm. Then we get into, about 2004, 2005, we start getting back over that 32% margin. 32% of your income is going towards this payment, your house payment. Peaked at 38% right before the 06 bubble. So still high, but not insane, crazy high. All right?
But high.
But high. Then it started moving down because of the housing market crash. Bottomed out pretty much 12. 22% of your house payment, or your monthly payment, was going towards the house. That's extremely low. 22% of your monthly budget. Low. That's crazy low. Okay? And that was because the prices were so low. Mm-hmm. And then we started getting our prices back up. We moving forward. Everything was going hunky-dory. We did peak about 28% around 2018. In the middle of summer of 2018, our monthly payment got at 28.9, came back down to 25, and then we turned around, and in 2020, we turned around and the market crashed. When the market crashed in 2020 because of COVID, percent of income ratios did not crash. They actually started going up in 2021. Mm-hmm. 25, 28, 29. Peaked at 42.2% of your income was going. This is they call it the post-pandemic bubble, but everybody was buying houses at low interest rates, but buying at high dollar amounts.
Yeah.
So look at that influx. Price matters a lot because we had higher rates. We had rates about what today's rate was in 2011. We were probably about 5%. Between 2011 and about 2012, 2013, we were probably in the fives. Mm-hmm. maybe some 4s. But in 2021, we're still paying 42% of our income.
Yeah.
Now we're currently at 36% of income. So we're back down, a little high, but we're coming back down, all right, to some affordability. But going back to the first graphic, it has nothing to do with affordability on what's going to bring back this market. It's the tale of two markets. Yes, the South and the West is looking at an affordability issue, but the Northeast and Midwest are looking at an inventory issue.
Yeah. Yeah.
Until these two situations can get rectified in two separate different aspects, you're not going to fix housing nationally. You may be able to fix it locally, regionally.
And that's where it comes in, is that, you know what, more than ever, real estate is hyper local.
Well, and that gets into the aspect of don't let the home prices and the headlines fool you. And this is where we get a lot of these trends. Spend about 5 minutes online searching for news about housing market, and the odds are you'll see something pop up about home price. You may even stumble onto social media influencers saying where we're headed for a crash. Let's get you the context you need. The truth is prices are going to vary depending on where you live, but they're not all going to crash. The biggest thing feeding into confusion online is how different home price trends are by area right now. So they have this broken down from the Reese Club and Zillow. Year-over-year change in home prices in the 50 largest metro markets, February 2025 to February 2026. So year-over-year for February. Here are the metros that were down: Memphis, Tennessee, Los Angeles, Charlotte, Washington, D.C., Nashville, Tennessee, Portland, Oregon, Riverside, California, Seattle, Washington, Phoenix, Arizona, San Jose, California, San Francisco, California, San Diego, California, Sacramento, California, Houston, Texas, Jackson, Florida, San Antonio, Texas, Raleigh, North Carolina, Atlanta, Georgia, Las Vegas, Nevada, Denver, Colorado, Orlando, Florida, Dallas, Texas, Miami, Florida, Tampa Bay, Florida, and Austin, Texas. All markets that drive a lot of the headlines, especially the California markets. Everybody looks at California for some reason, in my opinion, and think that's what the rest of the country is doing.
Well, they tend to look at the coasts. They tend to look at the coast first because trend-wise, whether it's music or whatever it is, trend-wise, the coasts get it, whatever it is first, and then it works its way into the Midwest.
Into the Midwest. And I get that. But look at here's the ones that are positive. All right? So, by the way, we went from the worst of the worst was the last one, Austin, Texas. They're down 6%, almost 6%. The best one was actually Memphis, Tennessee. They're down maybe a quarter of a point. I'm going to do the same thing. We're going to put the best at the very last. All right? Baltimore, Maryland, Columbus, Ohio, Oklahoma City, Oklahoma, Indianapolis, Indiana, Pittsburgh, Pennsylvania, Birmingham, Alabama, Boston, Salt Lake City, Richmond, Minneapolis, Virginia Beach, Louisville, Kentucky, Cincinnati, Ohio, Philadelphia, Pennsylvania, Providence, Rhode Island, St. Louis, Missouri, New Orleans, Detroit, Kansas City, Buffalo, New York, New York, Chicago, Illinois, Cleveland, Ohio, Hartford, Connecticut, and Milwaukee, Wisconsin had the best year over year at about 5.25.
Yeah.
So this trend is holding. The South and West are struggling on price and have 2019 levels of inventory, which, let me tell you, 2019 levels of inventory are nice, comfortable inventory levels. They're looking for buyers, though. They don't have enough buyers coming into the market. We're still 50% down, and we don't have the inventory to address the buyers we have.
No.
It's just, again, it's the tale of two markets, in my opinion. And you really have to watch what is going on with your local market. If you are wondering what your home is worth, call your realtor. Don't have one? Call me, call Nancy. It's not that hard. Eddie Ruettiger, Nancy Vallee. I guarantee our name's going to pop up in your search 6 times over. You want it more effective? Just put Exit Real Estate Specialist at the end. It's going to come up.
Yep. More than happy to tell you what's going on in the market.
Yeah. You should always know what your house is worth once a year.
Yep.
Maybe twice a year.
Yeah.
But you should always know what the value of your home is. I also think you should have a line of credit drawn on your home. It should be 0, but if something goes crazy, something goes wrong, you have that line of credit. You don't have to scramble to get the line of credit. Or if you have an opportunity, you can take advantage of it with that line of credit, address it, and then pay the line of credit off in 6 months.
Yeah.
There's a couple different reasons to do this.
Yeah. It's always nice to have that line of credit in case something happens, because you never know. You never know.
Here's the thing. All the markets are expected to go up. Home experts agree prices will rise nationally for the next 5 years. Estimated home price performance December to December as forecasted in Q1 of 2026. 1.83 this year, 2.4 next year, 2.93 in 2028, 3.22 in 2029, and 3.42 in 2023 per Fannie Mae.
Nationally.
Yes. We're seeing about 4 to 7%, I think, is the pace this year, right now.
Yeah. Depending on your immediate area.
Yeah. But for most of the municipalities, we're between 4 to 7. There's a couple that are 2 to 3.
Yeah, I was going to say the 7. I haven't seen 7.
Romeoville. I bet you if I pull numbers on Romeoville right now.
Let's do Romeoville today.
All right, we'll pull Romeoville again. Daryl Fairweather, chief economist at Redfin, states housing prices aren't going to fall on a national scale anytime soon, and that's actually a good thing. It's normal for house prices to rise gradually over time. And these numbers are taking in those losses down in other states. Your Texas, your Florida, your thing. So these 2 to 3% growths, that's not what you're going to be growing. That's what the national average is going to be. Because again, Midwest and Northeast is carrying the market on their back for the South and the West. All right, we're going to pull up Romeoville and talk Romeoville when we get back after the break. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Ruettiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialists today. Call Eddie Ruettiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Ruettiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Ruettiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
Doing everything for you except the moving, and be glad. It's Get Real with Eddie.
I think I had Romeoville last week. Did I? We just did Romeoville. That's why I knew Romeoville off the top of my head.
I think we did. It was settled.
Well, I had hearing and here, and I
Excuse me.
can't remember if we did Romeoville last week or not.
Well, I wasn't here last week.
Oh, so the world just doesn't count anymore.
That's right.
Okay, well, that's fine.
You know I'm special.
I'm not arguing that at all. I'm not arguing that at all. I'm trying to get it to come up, and it's not. I didn't have. There we go. To go into here.
Go resale.
I will.
Okay. Okay.
Do we want the city or the area number?
Let's go Romeoville City.
Okay, hold on. So Romeoville proper, so you have to be in the city of Romeoville. Resale. Median sales price is $305,000. On all properties, up 5.2%.
Okay.
Now, I want to look at detached single family actually is down 0.5% in March.
Okay.
So, but they did peak. They were at 307.5 last month. And they came down month over month from 307.5 for all properties to 305. But they're still 5.2% higher because with us getting March numbers in now.
Well, and that could be simply just what closed.
A couple closings, a couple things
Yeah.
shifted here or there. Yeah, I agree. So, but I mean,
Don't get me wrong, 5%'s really healthy.
no, it is. I figured they would be. That was the one example, though. I was thinking that was 7%. I think they were 7% when we pulled them for February. So for the year over year, let me do that. Hold on a second. I can check that bar graph. Nope, last month they were. Oh no, that was last year. That's not last month. I think to get last month, I have to do this. Yeah, see, look. So this is monthly. All right. They were at last month. The median sales price was 317.5 for the month. That's not the average. Oh, that was last year's month. I'm sorry. So
Yeah, I'm not sure how you.
I don't know. I'm gonna have to. You know what we need to get is an InfoSpark training to really like break down on how these numbers.
Yeah, and if there are ways to pull different things,
Different data points. Yeah,
Yeah.
absolutely. I completely agree.
I'd be totally down with that.
But when you look at getting back into resale for all property types, average market time's up 3.4%. They went from to 30 days from 29 days last year. 12 days on the median, no change from last year. Month supply, my favorite number, is still sitting at 3.1. Now that's a 44.4% increase. Last year was at 0.9. They're at 1.3.
I was going to say not 3.1, 1.3.
I got a little dyslexic. This head cold still, still trying
Oh
to.
yeah, it'll mess with you.
I'm telling you, man. I'm telling you. So, new listings down 0.2% from last year. 517. Last year was 518. So we were down 1. Under contracts, down 9.9. Homes for sale.
That was
42.
an interesting number.
What's that?
Closed.
Down 10.9%.
Yeah, even though we have essentially the same.
With the same number
Yeah.
of properties.
Yes.
But we have made this argument before, and that is we don't have the same inventory. And
Right.
I'll show you why. So we're looking at all sizes. Let's look at 1,000 square feet or less. All right, 32 units. That is down 23.8%. So, all right, now here's your average old school house, 1,000 to 2,000 square feet.
There you go.
All right, this is down 8%. Okay, down 15% in more of your modern construction, which is 58 units. So this is 2,000 to 3,000 square feet.
Yeah.
That's your biggest drop. You're not getting that newer, more larger home.
The bigger home. Yeah.
No. A lot of the stuff coming down to market. Now, your big homes, 3,000 square feet or more, there was 12 of them closed last month. And that was an increase of 33%. So you're seeing the big homes, 3,000 square feet or more, those are selling. But you're not seeing that mid-size average house.
That's interesting.
So,
But it's all about what went to market too, what was listed.
well, and that's where you're at. It comes
Yeah.
down to the listings. So you should do this before you fall in love with your first house. And you know what that is, Nancy?
Yes, I do.
What is that?
Get pre-approved.
That is absolutely right. Have you started looking at homes yet? If you have, it's already time to get pre-approved. Because here's what not enough people know. If buying a home is on your radar, even if it's more of a someday plan, then right now is the time to get pre-approved. You don't want to wait until later in the process to tackle this step. No matter what you've heard, pre-approval isn't about commitment. It's about clarity. That's right. You get pre-approved with somebody, you're not stuck with that person. You can change. You have a right to shop.
Yes.
But it gives you your upfront numbers.
Which are really important because, you know what, people, again, are very focused on price of the home, but it's really payment and what your payment's going to be and how comfortable you are and how much you've saved for a down and all that goodness.
I agree. And I don't know how many times I have had to go, especially with lenders that are new to working with me, because they'll give me, well, here's the price. Okay, well, what did you use for taxes? Well, what does that matter? It matters a lot because we're looking at areas where taxes vary anywhere from $500 to $1,000. So,
or more, depending on the area.
Depending. Usually, most time they're within that $5 to $1,000. Sometimes it's a little more, but not much more because they're always looking at similar property price ranges.
Yeah.
All right. So if you tell me $300,000 here, but there's a $500 difference in property taxes, I might be able to take that person and put them at, $320 or $325 in the area where the property taxes are down $500.
Mm-hmm.
I've literally set up searches for all the areas. And if the property tax is this amount or less, and I think I do it in $500, I've done it in 1,000 increments and 500 increments.
It makes a big difference.
Yeah.
In your payment.
Because I can turn around and I can target them in on properties. Now, is it a perfect targeting? No. We still have to run numbers on the property. There may be an HOA fee. There may be a parent HOA fee. But we look at the numbers and we look at the monthly payment.
Yeah. Well, and there might be a senior freeze. There might be all kinds of
Absolutely.
factors.
Now, that's a great point because so many times I get people that are coming in and like, I want to buy this. The property taxes are so low, da-da-da-da-da. And I go, whoa, hold on. Let me look at this. Okay, these are not the taxes you're going to pay. Well, why not? And we got to work it backwards and tell them this is the taxes you're going to pay. Well, why is that? They have a senior freeze. They have a senior exemption.
Yeah.
They have a
or it's a
veteran's exemption. Because there's some properties, and I'm seeing them a lot lately, where, if you're a veteran and you have a disability, you get a discounted rate in your property taxes in Will County.
Yeah.
I'm pretty sure some of the other counties
over 70% disability. It's zero.
Zero. Yeah.
For the state.
Yeah. Bankrate explains the best time to get a mortgage pre-approval is before you start looking for a home. If you find a home you love but don't have a pre-approval handy, you won't have time to get the pre-approval before you need to make the offer.
And that's another reason to speak to a lender previous to all this and getting your pre-approval is if you are a veteran, running the numbers and taking advantage of a VA loan. A lot of vets don't do it. So discussing that with a lender and what that means and the advantages, you need to have that discussion.
Yeah, you need to have that discussion because taking advantage of that is just probably one of the greatest things you can do. And you've earned it.
Yes.
Say it again. You've earned it. All right. We've earned a break. So we're going to take a break. And when we get back, we're talking about the best week to list your home. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Ruettiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Ruettiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Ruettiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Ruettiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
It's Get Real with Eddie, where everyone deserves the opportunity of home.
It is around the corner.
Yes, it's our fun time around the corner.
So, that we get this every year. Realtor.com says there's a window where stars really seem to align year after year. And it's coming up fast. Based on their analysis of historical trends, the ideal week to put your house on the market this year is April 12th through the 18th.
It's also 911 telecommunicator week. Just so everybody knows.
All right, it's 911 telecommunicator week. That's awesome.
Yes. So you buy a house and tell your local 911 telecommunicator thank you for their service.
Don't call 911.
Don't call 911 to
tell them that, though.
Please don't.
Yes. Don't call 911 to tell them that.
No. They'll say thank you, but
Yes.
not good.
No,
not good.
Not a good call to make. Why? Well, here's why this window stands out particularly to be more seller friendly. Buyers are more active. According to the research coming out, Realtor.com, homes listed during this week typically get about 16.7 more percent, or 16.7% more views than a normal week. Sales happen faster. Realtor.com explains the added demand from buyers sets you up for a faster process. 17% less time than a usual transaction. Better price for your house. Since the number of homes for sale has grown, it's normally the buyers asking for credits, repairs, pricing adjustments today. But during this early spring window, about 18.9% fewer homes do a price cut. That gives you a better chance to get a full priced offer. More profit in your pocket. According to the study, well-prepped homes list this week can compare a price that's about $5,300 more than the average week. And that's $26,000 more than homes that start at the start of the year. So you get about $5,000 more on this.
Whoa. It's pretty good. Pretty good.
ROI?
Yeah.
Yeah. I think the ROI is there. I mean, it's definitely there. So what do you need to get ready? If you're thinking about selling, you want to take advantage of the sweet spot, your next step is shockingly simple. Call your local realtor. They're experts on your area, key to the current trends and the neighborhoods and the state. Now, these trends vary. We've always noticed our market is about 2 weeks after this date, they always said.
Yeah. Yeah. We tend to go a little bit later. I think it has to do with the weather.
I think it has to do with the weather.
And school come.
I think it's school. We always seem to be, they're always calling this at the first week or that midweek somewhere in April. Mm-hmm. And we always tend to be the last week to the first 2 weeks of May.
Mm-hmm.
So, I mean, so that, and I think the end of school really, really targets people in on this.
Is it just me, or is school getting out a little bit earlier now? Don't they start early and kind of get out earlier?
So that goes back into the whole theme of the show of Tale of Two Cities, and that is the tale of two school districts. You have some school districts that are going to get out at the end of May.
Yeah.
My son's school district doesn't get out till June 2nd.
Oh, okay.
So it's
the twins graduate the 18th of May.
Yeah, and
so Plainfield's out super early.
A lot of the high schools let the seniors out early, and they graduate them early now. I don't remember them used to doing that.
No, we didn't graduate till June.
Till after school was over. You'd go to the very last day. But you wouldn't have to take I didn't have to take my finals.
Depends on how you were doing in the class.
Yes. If you were passing the class, you didn't have to take the final.
Make you take finals.
I think if you had to carry a C average or higher to avoid the final. If you were not carrying a C, then if you had a D or an F, you had to take the final.
Well, yeah, you had to make sure you were going to pass the class.
Yes, exactly. Yeah. So, do some sprucing up before you list the house.
Do your spring cleaning.
Sit down with your realtor. I mean, they're going to prioritize what needs to get repaired, what needs to get cleaned up, things that'll give you a quick win.
Yeah. While you're waiting, and if you're motivated, start cleaning. You know you want to leave. You know you want to go. You can grab a box and start packing stuff that you know you want to take with you. Drop off a box of stuff that you don't want. anymore. I mean, just take a bite at a time. Then it's not so overwhelming.
Yeah. So, interesting, they put this at the very end. Zillow says the best time to list is in May, and that means the golden window for sellers isn't closing after this 1 week. It's open all season long. And I tend to agree. I mean,
Yeah.
Because here's the thing. You're going to get $5,000 more if you list in this week, but
Maybe.
some of the people after you are going to use you as a comp, and they're going to get more money than you because the market's going up.
Right.
We're not seeing a downward trend. We are seeing an upward trend in pricing.
And it's never a bad time.
I agree. It is never a bad time at all to get your house listed and get your stuff going up. And remember, the biggest thing I think you can do is that front yard spruce up right now.
Oh, yeah.
Get your flowers planted, get your stuff out. $250 to $500 to get that all cleaned up and, maybe throw down some fresh mulch or some fresh stone, whatever it may be.
Get a potted plant. Something easy.
Yeah.
A fresh welcome mat.
Yes. I mean, just that is your first contact. That is the first picture we have to have in our MLS is the front door picture. I can't start you in the kitchen. I have to, by MLS rules, start you with the picture of the front of the house. So make sure that is one of the areas, because that is the first thing that's going to win you over or you're going to lose.
Yeah. They set the tone. That front door sets the tone. Clean it up, wipe down the spider webs, get the leaves swept off, the old, Christmas glitter, whatever's out there. Clean it up.
And look at your agent. Tell them to set you up for a search for your neighborhood. You need to know every house coming up on the market, every house going under contract, every house closing. You need to know those numbers.
Yeah, that'll give you a good picture of what's going on currently in your neighborhood.
Yeah. Because the more you know and the more informed you are, the better off you're going to be on getting your property sold quick, fast, and easy. At the highest dollar amount with the lowest amount of requests from the buyer. Mm-hmm. And, I'll throw it out there at the very end. Don't be afraid to get a seller's home inspection.
Oh, absolutely.
The home inspectors will come out and do an inspection on your property. And now you've got a checklist of things that you can get done.
Yeah, and you can go through that list and with your realtor and kind of look and go, okay, we really need to address
this, and this.
This, and this.
Yeah. Yeah.
And then you lay that out and write completed on that inspection.
Repaired, addressed.
Yeah. And lay it out on the kitchen table so when those buyers come through, and that's gold. That's golden.
I completely agree. All right, that wraps it up for Get Real with Eddie. Don't forget, tune in every Wednesday here and check us out online at getrealwitheddie.com along with all your social media channels and YouTube. I'd love to see some more clicks on our YouTube channel. Just look for getrealwitheddie.com. But that wraps it up here. You can always go to getrealwitheddie.com 24 hours a day, 7 days a week, talking about your largest investment, your home.
Thanks for listening to Get Real with Eddie. The views and opinions expressed are those of the host and guests and do not constitute legal, financial, or real estate advice. Listeners should consult appropriate professionals regarding their individual circumstances. Eddie Ruettiger and affiliated parties are not liable for actions taken based on this content. Eddie Ruettiger is the designated managing broker of Exit Real Estate Specialist, Illinois license number 481-014247, located at 2405 Essington Road, Uden, Joliet, Illinois 60435. Exit Real Estate Specialists is an equal housing opportunity provider. Each Exit office is independently owned and operated. To join an Exit office, call Eddie at 815-823-5478.